Listen, I did a video that's about the length of a typical weekend video. I did one Thursday night and posted it after we had this. This is an intraday S&P 500 chart, by the way, and I'm pointing to the left side of the chart. This was a big sell-off that we had on Thursday. I made a video after the close and posted that to prepare you guys for Friday. So if I talk about anything in this video and you don't understand it, you got to go check that one out because I introduced a brand new, an old chart, but with brand new revisions to it. Okay. Anyway, here's our intraday chart, and like I said, we started out here on Thursday and sold off 120 points. Then we tried to gap up open on Friday, and we were met by sellers once again, made an initial high of the day at 38.08, sold off, set our initial balance low, had another failure to bounce and get back to the high of the day. So we broke down out of the initial balance period range, and we sold off. And we sold off down to a point where we held a higher low against Thursday, and we were holding well above a certain element on the chart that really helped us mark the low for the day on Thursday. And from there, we reversed, and once we got back through our initial balance period, we went on to make a new high of the day, and finally, by the end of the day, we returned all the way back up here to our high from Thursday, a return to the scene of the crime, SOC. There's actually a blog article explaining that phenomenon that you can read if you haven't read it yet, or read again if it's been a while. So for Thursday, Powell began to speak, and we had this big sell-off. That was a quote-unquote news-driven event. So we always return back to that level from an effect that news has on the market, and that's returning to the scene of the crime. But we also know that as far as timing goes, we're at the end of the first quarter, and we've got a quarterly ES contract that's about to expire and roll over, and we swung down 120 points and back up a little over 120 points to get to where our high was on Friday. So quite an interesting ride there to facilitate getting out of one contract and into the other. Now the question is that enough visitation to the downside, and are they going to just go on ahead now and resolve the still unresolved all-time high that was set overnight, one night in February on ES? Are they going to get that resolved in the light of the day with S&P 500 so that that'll give us a new all-time high and resolve that with ES maybe before the contract rolls over next week, next Thursday night? Okay, so here is our simplified daily chart. We usually talk about working our way back to this median line, but here with March, here with our February high, this was our current all-time high. We took a little look above the median line and rolled over, but this time we have traded all the way back down to here, to the bottom of the bull fork. Here was Thursday's low. It held it just by a couple of points, and then Friday's low held against Thursday and held the bottom of this fork once again. I have not changed the position of this fork. This is the way it has been since I plotted the third point on it with the October low, and it has been a great useful tool for showing us when we're going to make our all-time highs and maybe fizzle out. And sure enough, here we've used the bottom of the fork now to mark where our lows are going to be. A new fork that I added is this small bear fork, and if I had just added this and started talking about it on the day that we made our current all-time high, I could have predicted exactly what our highs were going to be from here on out, because look at this. Here, this high hit perfectly on here and failed, and once again the next day on here and failed. And here was our March 1st high. Didn't even have enough energy to get all the way to the top of this fork, and here we failed and sold off. Okay, well, to break out of this fork and this bearish pattern, if we can break out of it, it's going to get us back on track to working towards the median line. All that's going to take on Monday is 39.04, and as the week goes on, this level gets lower and lower, and easier bar to cross. If we come into the week next week and break the 50-day simple moving average again, then we're going to maybe have one more test of the bottom of the bull fork by way of breaking the median line here of the bear fork. Are you with me? Okay. Now to hold the bottom of this bull fork, we cannot trade any lower than 37.32. And if we're going to hold it by a couple of points like we have here, then maybe we're only going to trade down to 37.34, 35. Okay, and this is a rising line, so the level is higher on Tuesday and higher again on Wednesday, and so on and so forth. If we are finally going to really sell off, I don't know why we would. The Senate just passed the stimulus bill, and the House is going to take it back and vote on it on Tuesday. I don't see any reason why we'd be selling off with that in our face. But if we do, when we finally break the bottom of this bull fork, we would maybe be heading down here to the bottom of this bear fork. But I have to caution you, though, that once we break out of this bear fork, it goes away. It's really no longer useful. We might come back and back test it a couple times, but really it's not going to, whatever the bottom of this fork is, it's not going to matter anymore, because this element will go away and we'll draw a brand new one once we finally get our hands around a new all-time high. Now, breaking out of this fork is going to get us on to resolve the ES all-time high, which should take us to about 39, 62, 63 on the S&P. And over that, we would continue on to get ourselves back to the median line of this bull fork. And right now, starting Monday, that's at 40.30, and it's just going to keep on rising as the days go on. So let's look at our roadmap one more time here and wrap things up. Here was our day on Friday, taking out the 50-day. We pretty much took our open to the 50-day and doubled that up to get our high of the day, but really our high of the day was about the 38.50 strike and the 10-day simple moving average, which was right in line with it. We rejected that on Friday, and you can see it's still a little bit of a falling line. Any higher high on Monday than the one we made on Friday is going to be a takeout of the 10-day simple moving average, and then the next target is going to be the 20-day. Since the Senate has passed the stimulus bill, I have to tell you that I would not be at all surprised to see a big rally Sunday night in futures, to the point of where we wind up gapping up open on or right near the 20-day simple moving average and simply take that out. If we can get above the 20-day, then we're going to be going for the top of that bear fork at 39.04. And if we break out of the top of the bear fork, we're going to go for a new all-time high to try and resolve the one with ES. If we come in weak for some reason, if there's still some unfinished business that some big player has, you know, maybe still some contracts of March that he needs to get out of, or maybe some calls that he's sold or what have you, we would break the 50-day simple moving average again. That's going to be at about 38.24 or so, 38.24, 25, something like that on Monday. If we break that 50-day again, then maybe we get that full sell-off one more time down to that bottom of that bear fork from the other chart. I'm sorry, down to the bottom of the bull fork from the other chart, and put a third higher low in. And if that sets up, this will be a huge buy, because I think if that sets up one more time, we're not just going to 39.63. We're going the distance to that median line. We're going to be over 4,000. Okay, before we, we're going to be on our way there before we end the quarter. Okay, so those are my thoughts. I hope this video helped you out. Again, if you didn't see Thursday's video, take a look at that. It'll help explain those changes to the simplified daily chart. Have a great rest of your weekend. As always, good luck and good trading.